Welcome to the Roy Morgan Weekly Update. If a federal election were held today, it would be too close to call. This week, One Nation's momentum continues, with the party increasing its primary support and now up 10 percentage points since the federal budget in early May, while consumer sentiment indicators continue to languish deep in negative territory. Following Pauline Hanson's National Press Club speech, One Nation primary support is up 2% to 31.5%, clearly ahead of the ALP that are down 1% to 27%, and LNP coalition, which is up 0.5% to 17.5%. The Liberals on 15% are unchanged and Nationals 2.5% up 0.5%. The Greens were down 0.5% to 13.5%, and Independents and other parties were down 1% to 10.5%, all according to the Roy Morgan survey conducted from June 15 to 21, with a representative Australia-wide cross-section of 1,575 electors. So support for One Nation has now increased in 6 out of the last 7 weeks since the federal budget, increasing from 21.5% at the start of May to 31.5% now. As well as One Nation's leader Pauline Hanson's first address to the National Press Club after 30 years in national politics, the success of One Nation's Fire the Liar online fundraiser continued, now raising almost $4.8 million from over 76,000 donors. That's an average of $63 per donor. The campaign tagline targets Prime Minister Anthony Albanese. A longer-term view of the Australian voting intention since the last federal election shows the stunning rise of One Nation, or the One Nation movement, since May 2025. Since the election, One Nation's primary support has increased from 6.4% to 31.5%, a 5-fold increase, and an estimated more than 5 million electors supporting One Nation. The big loser has been the Coalition, down from 31.8% at the election to only 17.5%. ALP support has also dropped from 34.5% to 27%. The other drop has been for other parties and independents, as One Nation's consolidated support from other minor parties and right-leaning candidates. So they're down from 15% to 10.5%. Support for the Greens has been maintained and is up from 12.2% to 13.5% since the election. Now, although behind on primary support, the ALP is still competitive on a two-party preferred basis. If a federal election were held now, the result, as I said earlier, is too close to call. On a two-party preferred basis against One Nation, the Roy Morgan estimate is 51 to 49 in favour of the ALP. However, if the contest is between the ALP and LNP on a two-party preferred basis, the ALP is clearly ahead, 54 to 46, based on how electors said they'd vote their preferences. Now, whether the contest is ALP One Nation or ALP LNP will depend on the seat-by-seat outcomes, and it's way too early to begin detailed analysis, especially given the dramatic rate of change we're seeing in party support. This week, Roy Morgan government confidence dropped 1.5 points to 61, almost 40 points below the neutral level of 100. Only 25% of electors believe the country is going in the right direction. That's down 1.5%. A clear majority, 64%, say the country's going in the wrong direction. Following the Reserve Bank's decision to leave interest rates unchanged last week, ANZ Roy Morgan consumer confidence increased 2.1 points to 72.8. That's its highest since early March, but still way below the neutral level of 100. In fact, consumer confidence has been below the dangerous level of 80 for 17 weeks and has averaged only 67.5 over that period. Driving the increase this week in consumer confidence was improved confidence about buying conditions, with people saying it's a good time to buy major household items, up 3% to 22%. This indicator's now improved for 6 weeks in a row by a net 20 percentage points since early May. No surprise really, given the massive, very visible end of financial year sales. As you can see though, the net buying sentiment is still well in negative territory at minus 20%. But this is the highest of the 5 key consumer confidence indicators. All 5 indicators are deep in negative territory, with the lowest being personal finances compared to a year ago at minus 37%. There was some better news with the ANZ Roy Morgan inflation expectations. That was down 0.2% to 5.8%, the lowest since early March. This means Australians expect annual inflation of 5.8% in each of the next 2 years. This was no surprise, with the average retail petrol prices dropping below $1.66 per litre last week. That's the lowest they've been since September 2022, almost 4 years ago. Of course, unfortunately for drivers, the fuel excise cut will start being wound back next week, when half of the cut is reversed and petrol prices expected to rise by about 15 cents a litre, with the full cut now expected to end in early August. As predicted, when interest rates increased in May, the latest Roy Morgan estimates of mortgage stress show an increase of 0.8%. Now 29% of Australians with a mortgage are at risk. An estimated 1.54 million Australians, 65,000 more than in April. As the May interest rate increase flows through to mortgage holders, Roy Morgan forecasts mortgage stress to rise to 29.5% of mortgage holders by the end of July. And if the Reserve Bank increases interest rates again by, say, 0.25% in August, mortgage stress will increase to an estimated 1.6 million mortgage holders, up another 62,000 from now. And looking forward, I'll be back next week to bring you the latest data on consumer confidence, inflation expectations, and of course the latest voting intention, including from New Zealand, which faces an election in the next few months. Thanks for listening. See you next week.